This is Agenda Awani with me, Naila Huda, and still at the center of our and the whole world's attention, looking at the United States tariffs. And this might potentially change, but as of now, we're looking at tariffs on imports of products from China reaching up to 145%. And this was announced by the President Donald Trump, who also at the same time announced a 90-day pause, although China being the exception to this. And we're seeing a lot of changes, but in a very, very short amount of time. So we really just want to look at how we can make sense of this. Is there really a strategy, a rationale? What can we predict after this? And most importantly, how do other countries, especially looking at Malaysia and within ASEAN, navigate these rough and very unprecedented waters? Joining us today to help make sense of this is Dr. Deborah Elms from Hinrich Foundation of Singapore. Thank you so much for joining us, Dr. Deborah. How are you doing?
Good.
Yeah, Dr. Deborah, we want to make sense of what's transpired, but I guess firstly, we just want to hear your thoughts on what's been going on overall. How do you make sense of it all?
Well, it's been crazy. I don't think anyone expected quite this level of trade disruption so fast. So, you know, we're not even 100 days into Trump's return to office. And the level of trade chaos, particularly for goods trade, has just been off the charts. It happens daily. It happens hourly. We've had, you know, pivots, reversals, reimposition of trade tools like tariffs against everybody globally, including places that are only inhabited by penguins. I mean, you could not have made this up if you tried to imagine what it would look like as far back as December. You know, you would not have thought we would be where we're at in April.
Right. And we want to look at specifically what's been going on between the US and China, looking at the 145% tariffs. And, you know, we know that there's been a bit of a back and forth, but as we know, it's up to 145% now. And how do you think that's going to impact relations between these two giants now?
Well, it's deeply alarming. Again, I don't think anyone imagined that we would have this kind of hard decoupling. And if we had this kind of hard decoupling, I don't think anyone thought it would be this fast or implemented in such a slapdash way. And so what we've had here is tariff escalation by the US, met at first by relative restraint by Beijing, and then continued escalation by the United States, met with less restraint by Beijing. And we're now in a situation where the tariff levels back and forth between the two are prohibitively high. So it's basically stopping most trade in goods between China and the US, with the now spillover into other areas with other kinds of tools that are not just about tariffs for tariffs, but tariffs for restrictions on critical minerals, or tariffs and restrictions on critical minerals for content restrictions. Can you have any Chinese or American-made content involved in supply chains? I think this is escalating much more rapidly than people imagined.
And who do you think is going to feel this the most?
Well, U.S. consumers for sure, who are suddenly having to pay an awful lot more for anything manufactured out of China, which is still about a quarter of U.S. shopping comes directly or indirectly through China. But it will also have impact, of course, China as well, as they clamp down on inputs from the U.S. and particularly on final markets from the U.S. But it will have implications for all of us, including across Southeast Asia, because much of the production in this region is in whole or in part of supply chains that run between the US and China. And when those get disrupted, we all in Southeast Asia also get disrupted.
Yeah. You know, as they say, when the US or China sneezes, the whole world catches a cold. And I think it's safe to say for sure we're all feeling the chill already. What are the potential risks for the rest of us, especially looking at Southeast Asia?
Well, I think if we just look at the weekend's craziness on electronics, that gives you some sense of where we're at. So prior to Friday, it's only a couple days ago, but prior to Friday, we had the situation where tariffs between the US and China, as you just mentioned, were escalating to 145% plus. And tariffs on the rest of the world are sitting at 10%. With the potential for reciprocal tariffs to be reimposed within 90 days. In some cases, those reciprocal tariffs are quite high. into that scenario, late on Friday night in Washington, the Customs Department released a list of electronics products, a long list, laptops, smartphones, etc., that were suddenly exempt from these reciprocal tariffs. So that took tariffs from over 145% in China down to 20, and it took tariffs back in the rest of the world down to zero, from 10% to zero on these selected products. And so many people, you can imagine, were popping champagne corks because they thought suddenly, instead of paying prohibitively high tariffs, they are now paying no tariffs or low tariffs, lower tariffs. However, that has been walked back already by the US administration by saying that there are going to be new tariffs from a different classification coming potentially within days. It could be within a month, but in very short order. And we have no idea what that level will be. It could be 10%, it could be 40%, it could be 100%. We really have no idea. And so that's all within a 48-hour window that you had very high tariffs to almost no tariffs to potentially very high tariffs again. That kind of uncertainty is making business really, really difficult and making forecasting growth, employment, future job options completely impossible.
I mean, it's difficult for business, but it's also another headache for policymakers, right? I mean, we want to talk about the perspective of, or the aspect of trade policy, how countries are supposed to keep up with the flip-flopping, the numbers that keep changing, and the new terminologies, the buckets and whatnot. I mean, how is trade policy around the world supposed to keep up with this?
With great difficulty. With great difficulty, because again, when policy changes that rapidly, your instinct especially is to simply say, I'm not going to pay attention anymore. That's it. I'm done. But unfortunately for the rest of us, you can't sort of say, that's it, we're done, because even in areas like electronics, the United States has been a key driver of electronics and a key purchaser of electronics. And what the US purchases is at price points that others don't. So even if you wanted to say, that's it, we're out, we're not dealing with this crazy United States anymore, we're going to do something else, the shift is not easy. And so policymakers as well are grappling with the speed, the scale, the complexity, the knock-on implications. And ultimately, their big challenge at the moment is, what is it the United States wants? Because if you're going to go into any kind of negotiation, discussion, maybe not at all, you need to have a sense of what is it that the other party is looking for. And the big challenge for countries like Malaysia and the rest of ASEAN is it's totally unclear what the United States actually wants. And in fact, they seem to want 6 different things all at the same time, and many of them are in conflict with one another. So there isn't anything that you could really even come up with to offer that would solve conflicting demands.
I mean, yeah, what we're trying to do here, in essence, is trying to understand what's going on, right? That might be difficult, but we try to anyway. And one thing we were trying to grasp is the 90-day pause as well. Would you say that this is perhaps reactionary? I mean, it seems as though they want to respond, they are responding, or are they, I mean, is there any rationale behind this? And yeah, are they reacting to how we're reacting, the rest of the world, I mean?
Yes. It's great, excellent questions, and everyone is asking the same kinds of things. I mean, clearly, the pause came about because the markets reacted extremely badly to the idea of reciprocal tariffs, or what Trump called Liberation Day. I think he thought that Liberation Day would be met with great enthusiasm, and instead it was met with markets tanking, especially U.S. markets, including in areas like bonds that normally don't do that. So I think that level of economic distress sent a signal that even the White House couldn't ignore, and they had to pull back on the Liberation Day tariffs and at least pause them for 90 days. I think that was accompanied by the confusion about the way in which those tariffs were allocated. And I'm not going to get into all of the details, but basically they had a nonsense formula. And the result of that was that developing countries especially got hit very hard. And developing countries in Asia are at the top of the list of those who got whacked by this Liberation Day tariff agenda. And that also created new problems in Washington, which is, did we really mean to hurt some of the poorest developing countries as hard as we have done? And if not, can we somehow politely walk this back without looking even more stupid. And I think that has proven to be a challenge as well.
Yeah, we're talking about reactions and responses, and we're seeing some of that from the Chinese side as well. What do you make sense of that?
Well, the US and China are in a very different category from the rest of Southeast Asia, where the rest of the region has had the worst damage, at least paused for the moment. Again, we're waiting to see how the chips fall. We are still paying again 10% tariffs, which is unprecedented, but at least it's not 145%. And so if you look to the US and China, we are entering very dangerous territory, I think, where we've had about as much tariff escalation as you can have. And so now if you want to respond in negative ways, you move to different areas. And that becomes, again, increasingly dangerous for both the US and China, but also for the global economy. And let me just give you a couple of areas where this is already moving. So one is the restriction of particular products like critical minerals. It's the restriction of activities of particular listed firms who are now being put on entity lists and sanctions lists. Those lists continue to expand. And it's the use of different kinds of regulatory tools, especially by customs officers, to clamp down on US or Chinese content in domestically manufactured products, either in China, avoiding use of US content, or increasingly likely in the US, avoid the use of Chinese made content. And so that, again, escalates this to a whole nother level where I don't think we can picture yet what that will look like because it's so rapid and the consequences will be significant.
Talking about consequences, surely we've been seeing some of the impact in just the past few days. Looking specifically at trade patterns, have you noticed any significant shifts looking specifically in Southeast Asia?
Well, one reaction that's very easy to say and very hard to do is don't trade with the United States or don't trade with the United States and China. That's easy to say. That is incredibly hard to pull off because unless you are a firm that already had a global footprint, one, or a regional footprint, two, you already had factories with distribution and logistics set up for all kinds of different scenarios, it's really hard for you to just simply pivot. And the speed, again, is, by Friday, you need to do something. Most firms are not set up for that. So if you're going to dramatically restructure where you get your materials, where you get your parts and components, where you have final markets, that takes time and it takes money. It is not simple for you to just say, well, if I'm not going to sell the United States, I'm going to pivot and sell to Indonesia. That is not an easy transition to make. And so we're at a point now where firms are really struggling with what is the longer term future? In that longer term future, where's my role? Am I going to have markets? Am I going to have the same access to supply that I had in the past? And if not, where is more likely to be a sort of safe landing zone for me? And can I get from here to there? Can I invest the resources? Do I have the contacts and the connections? Or am I really looking at, potential clamping down on spending within my company and potentially even going out of business? I mean, that's the kind of world that we're currently living in, and it is deeply alarming.
I mean, this is rather unprecedented, at least in modern history, and there's surely no guidebook, no how to navigate tariff wars for dummies out there. So, as you say, it's not as easy to pull off, just cutting off completely trade relations or just trying to protect from all these shifts and all these impacts. But what are some ways for firms, industries to protect themselves, looking specifically in regions like Southeast Asia?
Well, I think a couple of things are helpful. So one is, of course, to pay attention to what's happening and to make sure that you're getting advice from people who are genuine experts in the field, because there's so much opportunity now. There are a lot of people giving bad advice, and that can lead to real challenges. So make sure you're getting good advice from people who actually know what they're doing. The third thing that I think is helpful, and especially helpful here in ASEAN, is the network that ASEAN has built up over the decades of ever closer integration options. So either within ASEAN or ASEAN plus its big trading partners, or the regional comprehensive economic partnership with 15 countries. For Malaysia, Singapore, Vietnam, and Brunei, they're also members of the Comprehensive and Progressive Trans-Pacific Partnership, this mouthful called CPTPP. But the point is there are a lot of different trading arrangements that are available for companies. And if you're not already looking at how to use those agreements to get you potentially zero tariffs and a lot more certainty and lower your risk, then this is the moment in which that's what you should be doing. What are those other markets where I have benefits that other firms might not have, where I can leverage these existing trade arrangements and at least lower the temperature on the amount of risk that I'm in?
Mm. You did mention a lot of bad advice out there. You know, we know what to do. What do we not do?
Well, let me give you one big one that I'm very worried about. I mean, if the tariffs are 150% out of China and you're a company sitting in Malaysia, the temptation is going to be enormous for you to take things in from China, stick a made in Malaysia label on it, and ship it to the United States. That's something that I think is likely to happen, and it is illegal. Don't do that, because the fines, the fees, the penalties could be catastrophic. And so despite huge incentives, don't go there. But there are ways to legitimately, at least for now, again, it could change, but there are ways to legitimately bring in products and components from China to manufacture them in Malaysia or elsewhere and then export them legally to the United States. So again, very careful thinking about what you're doing and how you're doing it. Very important. Following the rules, which is hard because they change all the time, but following those rules will help with making sure that any exports that you have to the United States or potentially now to China at least comply with the legal requirements, and you're not putting yourself at risk, because those fines, fees, and penalties can be implemented up to 5 years after you've sent the shipment. So it's not just that you're at risk in the moment, you're at risk after that as well. And so again, be careful who you're listening to and what advice you're following.
You also talked about looking elsewhere for trade, either within ASEAN or ASEAN Plus, other regional partners. How long do you is this a sustainable option? I know we're talking about reactionary responses, how to stay safe in this current context, at this current time and age. But you know, if we're looking at something a bit more long term, is this sustainable?
I think it's likely. I don't think that this chaos out of the United States is going to go away anytime soon. So people who are like, well, you know, U.S. midterms coming in another year and a half will solve something. I mean, a year and a half in a business term is way too far away. And an election for Trump, you know, we'll see whether the man runs for election or just stays in office or what happens. But I just think you should expect turbulence out of the United States for a long time. Now, that doesn't mean you should give up on the U.S. as a market, because for a lot of firms, it remains still very lucrative and very attractive, and they buy stuff from the U.S. that no one else does. So don't give up entirely, perhaps, on the U.S., depending on your, you know, what it is you make. But I think thinking about these alternatives has become a major priority, or should be a major priority, for firms of all sizes. How can we limit our risk and our exposure? And so thinking about, well, who else might buy the thing that I'm making is important. And this is the time in which to rethink some of the patterns that maybe just evolved over time that might not make sense. Maybe they didn't make sense before, but they certainly make less sense now. So how do we, again, restructure, look for different markets, look further afield? Could we go to Europe? Could we think about Latin America as a market? Could we think about Africa? I mean, all kinds of ideas, again, that never would have been in your mind before should be bubbling up to where you say, actually, you know, the Middle East is an interesting market for us. Let's see what we can do.
We're talking about risks, we're talking about losses, but is there anyone that could potentially gain from this? Anyone taking opportunity of this calamity?
It's hard to find pockets of opportunity. I mean, I'd love to be able to say, yes, it's going to be great, we're going to do well, because especially in this region, a lot of people thought Trump 1 went very well for Southeast Asia. As people pivoted, as they moved to a China plus one strategy, this region benefited. I think it's going to be much harder this time around, because we're not just talking about a minor problem between the U.S. and China, but a global disintegration of 80 years worth of economic structure. And that's not easy to navigate through. So I think those pockets of opportunity do exist, but they're going to be harder to find. They're going to be probably less lucrative, is my guess, because in addition to all the crazy on trade, you're going to have potential for recession, lower growth. In that environment, firms and customers are going to buy less. And as they buy less, there's less opportunities. So I would love to be the bearer of fantastic news. This is not the time for fantastic news. I think we need to be pragmatic and realistic about where we're at. This is the time for some really hard looks at what you do, where you do it, why you do it, who your markets might be, and to be ready to pivot as quickly as possible. And I would say if there's any opportunity for me, it's that a lot of the companies that I have dealt with across the years in Southeast Asia are actually quite nimble, very flexible, very pragmatic, prepared to think about doing things differently. And it's those kinds of characteristics that are going to serve you well now as we see this complete reshuffling of the way in which we do trade.
And just lastly, looking very briefly at ASEAN, specifically with Malaysia as the chair of ASEAN in 2025, is there any leverage for Malaysia in navigating this?
Well, I think one of the things that Malaysia has done that is, in my view, amazing is the ability of the Malaysian government to work with its ASEAN counterparts to say, we should have a collective statement. So they had an ASEAN economic ministers meeting, an emergency one, which is amazing in and of itself. They managed to put together a statement. I think that's helpful. I think they've been trying, especially by Malaysia, to say, rather than go down this bilateral route of all of us send a delegation individually to Washington to come up with bespoke outcomes, we should also think about an inter-ASEAN approach, and that the 10 of us together are certainly more powerful than each of us individually, where we can be picked off one at a time. I think that's to be applauded. I think that's exactly why you have an ASEAN, and that's why you started down this integration path in the first place. 10 is better than 1. So working together cooperatively is very helpful, and especially to position ASEAN as a potential growth opportunity for investors and firms that are also relocating. Remember, it's not just ASEAN that's struggling. It's Chinese companies, it's American companies, it's European companies. So making ASEAN that integrated production and platform base that they've been talking about forever, this is a moment in which ASEAN could seize that opportunity to be that market of the future.
Yeah. All right. Thank you so much for your time. And I think we definitely be keeping in touch as we expect more twists and turns coming. Thank you so much, Dr. Deborah.
Thank you.
That's Dr. Deborah from Hinrich Foundation of Singapore. And that's all for Agenda Awani today. We'll catch you another time. With me, Naila Huda.